SoFi stock is sliding. After hitting highs above $32 in late 2025, shares have pulled back sharply in 2026, dropping to under $16. If you're holding SoFi, it hurts. But is this a collapse or just a fintech shakeout? Several factors are weighing on the stock. Inflation remains stubborn, the Fed has paused rate cuts, and that's pressuring growth names. A recent short seller report also sparked panic, and equity raises have investors worried about dilution. But the business tells a different story. SoFi reported its first ever $1 billion revenue quarter, added over 1 million members, and is guiding for around 30% revenue growth in 2026. They're now profitable, not just a speculative tech app. The drop appears more like a valuation squeeze, as higher rates make investors cautious even while growth remains strong. If you believe in the long-term digital banking story, this could be a buy the dip moment, but expect volatility, especially with everything going on in the economy.